In the great IPO rush that we saw last year, companies from different sectors and industries and from different parts of the country tapped the primary market. I'm in Pune this week for Life After Listing. In January last year, when Indigo Paints launched its IPO, it captured public imagination. The entrepreneurial journey of Hemant Jalan and the blistering revenue growth the company that he built has been turning in a category that's dominated by well-entrenched players and iconic brands has found many takers. It's been a year and a half since Indigo Paints listed, since you went public. What has the last year been like and how substantially has life changed, you would say?
Managing investor relationships. It didn't exist earlier. We had only one investor, Sequoia Capital.
Yes.
Now there are dozens of existing investors and potential investors. So engaging with them becomes one added responsibility that did not exist earlier. I think one has to be a little more mindful of what one says in the public space because there is much more limelight on you. I remember our earlier board of directors meetings, they were all only about discussing business strategy.
And
now 50% of the time is on corporate governance, which the independent directors naturally are mindful of, and they should be, and that's the role that they perform. I think one also has to be a lot more careful about sharing of information, even with our own team. Previously, at the end of every month, we shared every little detail with our entire team of at least 70, 80 people across the company. Now we can't do that. It would be illegal. So we have to be sensitive about sharing of, unpublished, price-sensitive information. So those are some of the restrictions that come on. Otherwise, it hasn't changed very much, and the reasons are that we already had a very major A-class investor on our board for 7 years in form of Sequoia.
2014, right?
2014 is when they invested, and concurrent on their investment, Ernst & Young came on as an auditor. So between Sequoia and Ernst & Young, all issues of a growing mid-sized company, in terms of governance, compliance, aligning your accounting standards and disclosures to international norms, all that had happened way before the IPO happened. So all that was already a part of our DNA.
The markets have been so volatile in the last few months. Start of January, we are now in June. Very different scenario in terms of valuations for most companies, and most share prices have really, tanked. Yours is still pretty close to the offer price from what I can see. How do you look at that? How do you look at this volatility? How do you look at that valuation? What does it do to you? Do you have an eye on it?
Well, I'd be lying if I say I didn't have an eye on it, but do I check the share price of our company 5 times a day? The answer is no. I've never done that. And the volatility in the market are for factors which are beyond anyone's control. So there's no point in worrying about things that you can't control. So the only thing that we look at is how are we doing relative to other paint companies that are in the listed space. Now, if everybody is going down because of some war in Ukraine or some global energy crisis or the COVID outbreak, there's no point in worrying about something that you cannot control. But if others start doing well, and if our share price doesn't do well, then it becomes a point of concern. But fortunately, that has not been happening.
When you launched the IPO last year, it was largely an offer for sale with about 300, 350 crores of a fresh issue, isn't it?
about that much, yeah.
And you listed very categorically the use you would put those funds to. A year and a half later, would you say you've done all, you've checked most of it? So the expansion in Tamil Nadu, the plant in Tamil Nadu.
In fact, the amount that we had raised towards the expansion just a couple of days ago has been entirely spent.
Right.
So now the further expenditure has to come from internal accruals. And most of the other purposes for which, the stated purposes for which the fresh equity had been raised have been spent. There is a small amount which was expected to be spent over a slightly longer duration of time, but that amount is small. So I would say about 20 crores is yet left to be spent, which would be spent over the next another 6 months, 8 months time or something. But otherwise everything has been spent.
That your strategy, your route to market was very different from the entrenched players, the peers you mentioned, most of them listed with iconic brands and very, very high decibel brand communication. You took a different route at Indigo Paints. You accessed your customer not from the metros and the tier 1,
but from the tier 3, tier 4 towns.
You went the other way. What made you adopt that strategy?
You know, when we were very small, and I'm talking about maybe 15 to 20 years ago, so one didn't really have the luxury of sitting around the table and saying, you know, let's draw up a strategy. You know, you're more in the survival stage at that time. So luxuries like strategy more come as anecdotal things that you pick up along the way. So one realized by first-hand experience that selling in the metros and the large cities was very difficult because we had zero brand equity, nobody knew our brand. And we found from experience that the moment we venture out of these big cities, selling was not as difficult. So
dealers would play a bigger role then,
the influencing role of the dealer is much more, and the requirement of the brand equity is relatively less. So we said that, okay, if that is what works for you, you go and work there and, you know, focus your attention there. And over time, that became a very conscious strategy. It didn't take more than a couple of years to understand that that was the only way to go.
Right.
However, is that going to carry us for the next 15 years of our journey? The answer is probably not.
And you're making that pivot now,
We are making that pivot now because, you know, strategy can never be something constant in the entire length of journey of a company. It needs to be tweaked every now and then. So now the attention is shifting away to the more larger cities than the ones that we had been servicing up till now.
When you want to reach out to these markets, and that is the focus area now for further growth, what more will have to be done?
A lot different kind of engagement with the influencer community has to be done.
Right.
So, you know, the painters and the painting contractors play a very important role in influencing the choice of the brand. As you move to larger and larger cities, the role of the dealer gets less and less. And the role of the influencer becomes stronger and stronger. So it is completely reorienting the focus of the company that, okay, now the low-hanging fruits in the smaller towns are done, which was the more difficult part, by the way, because you're talking about accessing the hinterland of India and setting up networks there. Now you're talking about comparatively lesser number of cities, you know, which are more urban, so more hospitable to travel to and to work around, etc. So I would say that the hard part is done, but you have to completely change the focus of the entire sales force that, okay, now start focusing on these towns where you were not focusing on, and slight changes in the manner in which you work.
Would you be able to illustrate that?
The challenges of working with an influencer in a big town, and when I say big town, I'm not talking about a Mumbai or a Delhi as yet, but I'm saying, you know, take an Aurangabad or Sambhaji Nagar or whatever it's going to be called or whatever, you know, which are significant towns. They generally have populations in the range of 50,000 to 10 lakhs, as opposed to the towns that we were servicing, which were generally less than 50,000, you know, population by and large. So the challenges are different. The behavior of the dealers is slightly different. The behavior of the influencers is slightly different. So it's just focusing there, working with the influencers, explaining our schemes, etc., to them the way we have done it in the smaller towns. and
building relationships.
absolutely. And a relationship has many dimensions to it. One is the financial part of it, the incentivization.
Sure.
The other is a conviction about quality, which is very important. No influencer is going to recommend your paint just for financial incentives. Financial incentives are more of a hygiene. I think we'll manage to make that pivot quite successfully. It won't happen in a month. We've been trying it for the last 2-3 months. We're beginning to see success. It may take another few months before that complete change in focus in the sales force comes about.
What are you personally focused on, hands-on right now? When we met you a little bit earlier, I think were you having a sales meeting?
Every month you decide, the marketing team comes up with what kinds of schemes they are going to run for the trade in the subsequent month.
Yeah.
And since we are sitting on the 30th of June, we need to roll out
Get ready for
July.
Yeah.
It's as simple as that. So there has been a lot of turmoil in terms of the raw material prices and selling prices in the paint industry.
Yeah.
So I was just communicating to the senior people in the marketing side as to what the latest costing structure of the company is and how far they can go as far as offering schemes, etc. are concerned.
How much leeway they have.
And that's about it. And after that, they will design their schemes and do all that.
You mentioned raw material prices, commodity prices, inflation. It's affecting every aspect of life today. I think in the third quarter of the last financial year, you all saw a big price hike, perhaps the biggest
Which was
ever.
long overdue. It should have happened much earlier.
So what is the headroom there, and how do you accommodate this in your growth plans, this kind of inflation that we are seeing right now?
It's tough. It makes the whole environment a little unpredictable because when the raw material prices go up, traditionally in this industry, the price increase of the raw materials would get passed on almost immediately to the customer. In this particular scenario, last year was the first time in the last 20 years that we saw that the price increase on the selling side happened after a long gap.
Right.
It was long overdue. And therefore, the volume of that price increase was very sudden and very high, which is not good for anyone, either for manufacturers like us or for the trade or for the end consumer. Why the industry leaders chose to do that is something that I cannot answer. But since then, we have seen a return to the earlier regime of having minor price increases of 0.5%, 1%, once every 2 months or something, as and when the raw material prices go up. So I think all that volatility seems to be behind us.
Seems to be behind
us, but of course the prices are high. But most of that has been already passed on in terms of selling prices. Maybe some minor adjustments are still remaining, which are happening in an incremental manner as we speak. But no major shocks are headed our way, or so it seems.
How do you see the current economic environment impact consumer sentiment?
I think so far the brunt of inflation, I think the consumers have taken it in their stride, at least as far as paint consumption is concerned. If inflation continues to be at a high level in the next 1 year or something, at some point in time, will it start affecting demand? It probably will. We are hoping that would not happen. We are hoping that with the kind of monetary steps that we see RBI taking and moving up of the interest rates, etc., it looks like inflation will start moderating sooner than later. And as long as that happens, we don't foresee any great upheaval in terms of the demand trend. I guess I was never comfortable about settling down in the US. I saw many Indian families who were settled, financially, standard of living and, the quality of infrastructure, all that was great and all that was fine. But somehow deep down you felt that you'd always be a second class citizen, and there is something different about, let's say that I just yearned for India. I missed India and I enjoyed living in India. It was great to have a paid vacation for 3 years where the universities funded and gave me the best possible education that I could hope for, but never really tempted to settle down. And I knew that if I had to come back, it was now or never. So that's 42 years ago. There's not been a single day in my life when I've thought back and said, did I do the right thing or not? That never came to my mind. Some of my friends who are in India, when they travel to the US, and if they're in the San Francisco area and they visit Stanford and they come back and say, what a bloody idiot you were. How did you leave that lovely
even
place?
Today, even after Indigo Paints and the proven
No,
success
they don't say
of
it
your
anymore,
business,
but they would say it 10 years ago. But no regrets at all.
Yeah. Tell us a little bit about the Sequoia Capital entry into your business as equity partners, and how did that happen? Because that really was a pivotal moment in Indigo Paints' journey.
Much more so than probably the IPO. It was a major turning point and a very, very major milestone in the history of the company. A small investment banker kind of ferreted us out. He heard something about us from some of our major raw material suppliers for whom he had been working for. And he just made a cold call and said, I want to come and meet you to help you raise equity. So I said, that's not what we are planning to do, but no harm in meeting. And we were amazed at how much background research he had done on us. And he said, you can raise private equity from a VC fund or something. And at that time, the thought of parting with whatever 20%, 25%, 15% of ownership just sounded so horrendous. Why would I do that? He kept coming back. He was a persistent guy, and tried to explain to us that you have great ambitious plans, and this will help you compress the time frame
to achieve them.
To achieve that.
Yeah.
And then I talked to some of my friends who had raised capital, and they said, what are you worried about? Whether you own 100% or 70% or 80% of a company, if things work out well, then there is so much money to be made that the percentage doesn't matter. And if things don't work out well, and if the company goes down the tube, then whether you own 70% or 100% still doesn't matter. So take it, it's a good opportunity. And Sequoia was such a big brand name that the decision was easy. We kind of had instant chemistry, and I think they're still on board the company. It's been 8 years, and there's never been a single moment of mistrust on either side. They have been a good mentor on the side, to bounce off some ideas whenever we felt like something needed some bouncing off. And otherwise on the board, they've just added a lot of value in helping us refine our direction, telling us 2 years in advance ki, ab sochne lag jao about an IPO, start getting ready for it, 2 years down the road, 3 years down the road, but you have to start thinking that. So I guess they would just give us a gentle nudge in the right direction.
Right.
And that's how it's been.
But it's that investment that allowed you or sort of helped you make that Kerala plant acquisition?
No, that happened in the second round of their funding.
Right.
The first round that came in 2014, at that time this Kerala acquisition was not on the horizon. We simply were feeling with our hands tied to the back that we could not advertise enough because we didn't have the money.
Cash to burn.
Yeah, absolutely. Didn't really want to burn the cash, but you have to take some risk, because advertising is not something that you can spend 1 or 2 crores. You either go the whole way or you don't do it at all.
Yeah.
So if you go the whole way and spend, let's say, even 15 crores or 20 crores in advertising, and you hope that your sales will increase by X amount, and therefore you'll still break even. What happens if that doesn't play out exactly that way?
Right.
So you need some fallback cushion to land on, and that is what that fund provided. And Sequoia was very clear on what the objective was, and so were we. And the first day when they invested, the first meeting that we had after that, when they came down to Pune, and they said that for the next 2-3 years, don't worry so much about the bottom line. We don't want you to burn cash, but if you make a minor loss of 1 or 2 crores, that's what this fund is for.
Yeah.
Take aggressive bets now,
And
advertise,
look at the
grow
top
your
line,
top
look at-
line,
yeah.
the bottom
Yeah,
line
look at
will
growth,
follow
look
later
at
on.
top line, yeah.
Now, that's a very courageous thing for a venture capital fund to say. And that's exactly what our objective was. But I think they voiced it very correctly and put it in the right perspective.
You know, given that you're making this journey from India's hinterland to the bigger towns and cities, what are some of the challenges that you will encounter? I think you're number 5 now, Indigo Paints, in terms of market share, and a small number 5 in terms of market share.
Yes.
So, how do you see this strategic shift in the context of the competitive landscape, because this is where your competitors are even better entrenched, isn't it?
Of course. No, but the desire to become a big player in the paint industry was there when we were not the 5th player, but maybe the 500th player in the paint industry. And, I would openly tell our team that the desire is to get to number 1 or as close to it as possible, And at that time, it was complete laughter in the audience, that what is this crazy guy talking about? I guess now when we talk about it, it's no longer greeted with laughter, but greeted with wide smiles. Okay, the guy is very ambitious. So what? I mean, that's what you live for. I mean, what else do you work for? Certainly not for personal money or wealth anymore. And I mean, you crossed that stage long ago. So if you don't have a burning desire to achieve something more than just personal wealth or something, otherwise, at the age of 64, I should have retired a few years ago, but I don't feel like doing that for maybe another 10 years at least.
Sure.
So it's more like a professional challenge that you have to do that. You have to take the team along to achieve it, no matter how difficult it sounds. The paint industry was very competitive. Always been competitive. So
And
at that time, when we were a 5 crore company, we were competing with 10 crore and 15 crore companies.
And
One
now
never thought about the big players,
And now you're a 900 crore company.
Yeah, we were 900 crores last year. Maybe this year will be, 40% more or something like that. So at least you are in the big league. You're a smaller player in the big league, of course.
What's your goal for the next 10 years? What is that burning desire that keeps you coming to work?
You will laugh if I tell
day.
it, so I will hesitate in telling you that.
No, please, I will not have.
No, definitely the desire is always to be the largest. Now, whether that can happen in 10 years, unlikely. But can you get close to that in 10 years? Possibly.
You talked about wealth and what significance it has to you. What significance does it have when you are wealthy, and when companies go public? That's when you actually know how much somebody is worth, right? So when that is available, I'm sure your IIT classmates don't say, "Arey yaar, USA में रहना चाहिए था."
अब नहीं बोलते हैं.
अब नहीं बोलते हैं ना.
It means a lot
Is
at
it
an earlier
indulgence?
stage. It doesn't mean anything now. So let me put it this way: when a young man starts his career, comes out of college, well educated, what does he yearn for? I'll have a car of my own, and then he dreams of owning a house on his own, and then a family comes about, and then you dream of taking a foreign vacation, and then you dream of owning a fancier car and a fancier home, and all of that, and you think that these material needs will never stop. But they do stop at some point in time, because beyond a certain point, there is not much more that you can spend on. Now, I think one crossed that stage at least 5-6 years ago, where there was nothing material in life that one desired which one could not already afford. After that, further accumulation of wealth is just adding some zero onto your personal balance sheet. It doesn't mean anything. And I don't think any sensible entrepreneur, after reaching that stage, works keeping that in mind, or that ever crosses your mind in the course of the working or in the course of the year. Frankly, no, it doesn't mean anything at all. You have to work for a challenge. You want to create a legacy. You want to create wealth for all the stakeholders around you.
Yeah.
Now, the stakeholders are varied. Of course, they are your employees, they are your shareholders, your customers, your suppliers, and a whole lot of other people who are connected with you. That starts giving you a much, much greater kick in life than any personal material acquisition.
So wealth is the ability to continue to make wealth for others, to spread it in a sense.
And have one less thing to worry about, let's say.
Thank you so much. I
Thank
wish you
you.
great luck.